1.02 USD. That is the number flashing on the screens right now, up 0.037 cents or a solid 3.79% in the green for the session. If you are just glancing at the ticker ASST on your watch list, specifically looking at Strive Inc., you might be tempted to dismiss this as just another flicker of volatility in the microcap space, a random heartbeat in the vast ocean of Nasdaq listings. The expectation for a stock trading at this price point, hovering just barely above the psychological $1 threshold, is usually one of skepticism. The market narrative often treats these tickers as dead money or speculative gambling vehicles for day traders on the Robinhood app looking for a quick scalp. You likely expect this to be a story about a small company struggling to maintain compliance or a business model that is fading into obscurity. But here is the reality. And it is a reality that completely shatters that surface-level expectation. What you are looking at is not just a low-priced stock. You are witnessing one of the most aggressive, high-stakes corporate transformations in the current market cycle. This is not merely a Discord marketing company anymore, which is what the legacy data might tell you. The reality is that ASST has become the vessel for a massive strategic pivot involving Strive Asset Management, a reverse merger, and a balance sheet that is being rapidly armed with Bitcoin. While the average retail investor sees a $1.02 stock, the institutional reality is that this equity is being repositioned as a financial infrastructure play and a corporate Bitcoin Treasury vehicle, mirroring strategies we have seen from much larger players. You are not looking at a penny stock. You are looking at a company in the middle of a chrysalis phase, shedding its old skin to emerge as a capitalized financial contender. The gap between that penny stock expectation and this financial powerhouse reality is where the opportunity and the danger lies. Let's analyze the price action we are seeing right this second. That 3.79% move to $1.02 isn't just random noise. It is a technical defense. When you look at the intraday chart, you will see a fierce battle occurring right at the $1 line. In the world of Nasdaq listings, the $1 mark is the Maginot line. Falling below it triggers deficiency notices and the threat of delisting. Staying above it signals survival. The fact that buyers are stepping in at $1.01 and pushing it to $1.02 with significant volume suggests that there is a coordinated effort to defend this level. We are seeing bid support that looks structural, not just speculative. Unlike the liquidity you might see in Apple stock or Tesla stock, where the flow is smooth and deep, the action here is jagged and fierce. Every cent represents a percentage point. The order book is showing pockets of accumulation, likely from insiders or sophisticated desks who understand the merger implications, fighting against the natural selling pressure of longtime holders who are just trying to get out at break even. When we zoom out and look at the market mechanics driving Strive Inc. today, we have to talk about the sheer velocity of the rotation we are seeing in the small cap sector. The broader indices are choppy, and when the giants like Nvidia stock take a breather, capital often hunts for beta. It hunts for volatility. Traders using interactive brokers and fidelity platforms are screening for stocks with high relative volume and low float, and ASST lights up those scanners. But unlike a typical pump and dump, the volume here is underpinned by the news cycle regarding their Bitcoin acquisition strategy. This adds a layer of digital gold protection to the thesis. You are not just buying equity in a company, you're buying a claim on a corporate treasury that is actively hedging against fiat currency debasement. This attracts a different breed of investor, not just the SoFi Invest crowd looking for a meme, but macro-focused traders who are betting on the long-term appreciation of digital assets held on corporate balance sheets. Now, I want to address the elephant in the room, the corporate identity. For a long time, this ticker, ASST, was associated with Asset Entities, Inc., a company focused on Discord community management and social media marketing. That was the old ASST. If you dig into the legacy reports, you will find a business model built around Gen Z engagement, managing servers and digital marketing services. That business is still there, and it has value. The community economy is real. However, the market is no longer pricing ASST based on Discord server revenue. The market is pricing it based on the reverse merger dynamics with Strive. This is where the expectation versus reality tension is the thickest. Investors expecting a marketing company earnings report are missing the forest for the trees. The narrative has shifted to asset management and Treasury strategy. This is now a play on the financialization of corporate treasuries. Think about the psychology of the trader holding this stock right now. They are sitting at $1.02. If they bought at $0.95 earlier in the session, they are sitting on a nice 7% gain. The temptation to sell is massive. But if they sell now, they risk missing the repricing event that often happens after a reverse merger is fully digested by the market. This creates a prisoner's dilemma in the order book. We are seeing the ask side, the sellers, stacking up around $1.05 and $1.10. These are the resistance levels we need to watch. If the stock can break $1.05 with volume, it clears the bag holders from the previous consolidation range and enters a blue sky setup where the next resistance isn't until $1.25 or $1.3. However, if the broader market rolls over or if Bitcoin takes a hit, that $1 support becomes fragile. Let's talk about the specific catalyst that is changing the DNA of this trade, the Bitcoin Treasury strategy. We've seen this playbook before. A company with a stable but perhaps unexciting core business decides to convert its cash reserves into Bitcoin. This effectively turns the stock into a leveraged Bitcoin ETF for investors who cannot or do not want to buy the crypto directly on Robinhood Crypto or through a Coinbase account. By acquiring over 1,500 Bitcoin, Strive Inc. has linked its destiny to the price of the asset. This increases the stock's beta. It means that on days when crypto is flying, ASST should theoretically outperform the market. On days when crypto crashes, ASST will feel the pain double. This transforms the stock from a service sector microcap into a financial asset proxy. It is a bold, aggressive move that screams high conviction from management. They are not playing it safe with T-bills. They are betting the farm on the future of digital finance. From a macro perspective, why does this matter today? We are in an environment where interest rates are a constant worry. High rates usually crush small caps because their cost of capital skyrockets. However, if a company is holding an asset that is viewed as a hedge against monetary inflation, it changes the calculus. Investors might view ASST not as a borrower struggling with rates, but as a holder of hard assets. This is a nuanced distinction, but it is one that sophisticated wealth management desks at places like Fidelity Wealth Management or Schwab Intelligent Portfolios algorithms might begin to pick up on if the market cap grows. Right now, it's too small for the big passive flows, but it's exactly the right size for the aggressive active manager. Let's pause on the technicals for a moment. I want you to look at the volume-weighted average price, the VWAP, for the day. With the price at $1.02, if the VWAP is sitting at $1, it tells us that the bulls are in control. They are paying up to get in. If the price were below VWAP, it would signal distribution, big players selling into the rally. Currently, the price is holding above that average, which confirms the bullish momentum of this 3.79% move. The relative strength index on the daily chart is likely heating up, but not yet overbought. This suggests there is still room for the trade to run before it hits a technical ceiling. Now, I want to pivot to the fundamental business of the old entity for a second, because it is not irrelevant. Asset Entities Inc. built a platform around Discord. Discord is the operating system of the internet for anyone under the age of 30. It's where online investing communities live. It's where gaming happens. It's where AI development is discussed. By having a foothold in this ecosystem, the company has access to data and user trends that are invisible to traditional Wall Street firms. Even if the financial engineering and Bitcoin strategy are the headlines, the underlying ability to reach and mobilize digital communities is a strategic asset. In a world where attention is the currency, owning the pipes of community engagement on Discord is valuable. It provides a distribution channel for whatever financial products Strive might launch in the future. This brings us to the future outlook. What happens next? There are two distinct scenarios here, and you need to be prepared for both. Scenario A is the bull case, the micro strategy of the masses. In this scenario, the market fully wakes up to the Bitcoin Treasury holding. As the price of Bitcoin grinds higher, analysts start calculating the net asset